Who should you go to for advice? Author, TV personality, and celebrity financial coach, Lynn Richardson.
Just bring in financial expert Lynn Richardson.
My girl, Lynn Richardson.
We have Dr. Lynn Richardson. Good morning.
Financial expert Lynn Richardson.
Lynn knows what's up.
Lynn Richardson is a financial coach and also the author of Estate Planning Made Simple. Okay, good to see you.
Joining us now, life coach and financial expert Lynn Richardson.
We're joined by financial expert Lynn Richardson, author of Get Your Money Back, Tax Deductions You Never Knew About.
Be at peace with the money that you have, because everybody knows money cannot buy happiness.
To learn more about Lynn Richardson's webinars, books, and online courses, please go to lynnrichardson.com.
Hello, everybody. I am so happy that you are here. Listen, it is time to get right into it. I don't want to hold you back. So I'm going to tell you to get pen and paper. This is probably one of the single most important things that you can do for your financial health, for your financial wellness, for your financial future, but more importantly, for your financial present. So I'm just going to get us started. I'm going to get us all together here with the screen. Please forgive us for any technological difficulties that you may see or experience, and let us go on and get started. This has been an amazing few weeks, and before we get started, I'd like to share with you just a little bit of background. The Delta Research and Educational Foundation has committed itself to empowering families through financial health and wellness. And that means we're going to be healthy and we are going to be well. We're so excited about this opportunity that has been presented to us by the Toyota Foundation. And we are looking to help you get to the next level financially. What you'll see on the screen right now is just an overview of the sessions. Don't worry, you can go to deltafoundation.net, deltafoundation.net, and you can catch up on any episodes that you have missed, but you can also see what you need to be here for in the future. So I just want to get us started. I'm always going to give a review. And during a previous session or during a prior session, a few people said, well, you know what? We did a review. Well, there were 400 new people. And so I am an educator at heart. The thing that I love to do more than anything else is to teach people the things that I already know that can help their lives be better. So like any good teacher, I'm going to do a brief review. And I'm going to go to the definition of wellness that most resonates. There are several here, but the definition of wellness, according to Merriam-Webster, wellness is the quality or state of being in good health, especially as an actively sought goal. So that means we are actively seeking the wellness of our financial lives. We're actively seeking. We are not hiding. We are not in shame. We are not blaming anyone. We are not beating up on ourselves. We are actually doing the things that we need to do in order to get to the level of financial wellness that we see for ourselves. So I'm excited about that. Stair step one was to spend less money. And it was very simple. If you have $1,000, you live by the 10, 10, 30, 50, and you can put any number here. The first 10% was for tithing or giving. The second 10% was for saving, and put that in a high yield savings account. Go on and Google it, Pay Me Inc. The next 30% is for incidentals. That's for groceries, gas, hair, and nails. If it doesn't fit, get rid of it. And the remaining 50% stays in your checking account, a separate checking account for your bills. If you have more than enough money, then you want to pay off your debt. If you don't have enough money, then you want to subtract. You want to get rid of subscriptions, extracurricular activities, and sometimes even people. Yes, I was living check to Monday at one point in my life, and I had to give up people in order to get to the next level. So that's stair step number one, spend less money. Stair step number two was to get more money. Why? Because one stream of income is hazardous to your wealth. It is time to invest in yourself. That is Me Inc. I taught you about the difference between capitalism and socialism. I'll review that again today. I also shared with you that passive income streams is money that comes in without you going out to get it every day. So if you work anywhere, I don't care what the name of the company is, you have to go out and get that money every single day. So there are 4 income streams that you want to tap into. One, if you are an employee, that means you work for someone else and you exchange time for money. There's only so much time you can give, and there's only so much money they have. So that has limitations. Then if you are self-employed, that means you own your job. So you may be a self-employed real estate agent. You may be a self-employed hairstylist. You may be a self-employed consultant. You may be a self-employed tutor. But if you don't show up, there is no money. If you don't market, there is no business. If you don't do the books, there are no books. So self-employed, there's a lots of opportunity there, but it's a job that you own and you get to pick whatever 100 hours a week you want to work. I'm just telling you the truth. That's what it is. So I encourage employee income because you still have your 401k, your benefits and all those things. I encourage self-employed income because now you get to step out on faith. But at some point, you want to turn your self-employed income into a business. That means now you make money leveraging other people's time. You have a franchise. Other people can take your concept and they can build it for themselves. And you can think of any major restaurant, any major food chain, any major grocery chain, any major chain where you get to take something and you systemize it. And then lastly, there is investment income. There's investment from real estate. There's investment from your stocks and bonds and your interest on your investments. There's investment income from you being a creator. Do you know that most people in Hollywood who are making the most money are not famous? Most famous people aren't rich and most rich people aren't famous. It's those who are writing the scripts, writing the songs, producing the episodes. Those are the people in the background. So there are many, many different ways to get more money. Now, what's most important about all of this is to get your money back. Get your money back. Learn the rules of the game and play the game by the rules. How do you get your money back? 1, you start a home-based business so you can increase your cash flow and minimize your taxes with access to hundreds of tax deductions. Legal tax deductions. I'm not talking about something that somebody told you on the street. I'm not talking about something that you read on the news. I'm talking about what you will learn yourself from getting a financial education. So number 2 is to get a tax education so you know how to keep proper records. Let me explain something to you. Yes, there are tax deductions for your cell phone and for meals, but you must keep proper records. That's why today you're going to learn the rules of the game and you're going to play the game by the rules. You're also going to get legal wisdom. You do not do this without legal wisdom. Know what's for the law and know what's against the law. And let me help you understand this. Tax evasion is a crime. You will go to jail. But tax avoidance is not. It is perfectly okay for you to avoid paying taxes legally, ethically, and with the permission of the IRS. What you also want to do, if you start a home-based business, you want to protect your intellectual property and plan for a 7-figure operation with a strategy. Now, many people want to start a business, but most people don't know Facebook started out as a home-based business. Let's say a college-based business in a dorm. Amazon started as a home-based business, a home-based bookstore. There are many global businesses that started out as a home-based business. And the beautiful thing about having a home-based business is that you also get your money back. Now, what do I mean by get your money back? I am literally saying that this is one of the stair steps to wealth. And if you are not actively pursuing, what did I say earlier? I said wellness is the quality or state of being in good health, especially as an actively sought goal. The Global Wellness Institute defines wellness as the active pursuit of activities, choices, and lifestyles that lead to a state of holistic health. So what I'm saying to you is that getting your money back is an active state of being every single day, and it is based upon the choices that you make. Now, what do I mean by get your money back? I mean exactly that. I mean, if you go to the grocery store and you spend $300 and you come home with all of your groceries and you eat your groceries and you use the toothpaste, you use the soap, you use everything, and then you run out of groceries. Imagine if the grocery store manager called you 2 weeks later and said, come back and get your money. Let me help you understand something. You would stop, drop, and roll. If you got that call right now, you would leave this webinar. You better. Because what it's saying is we're going to give you your money back even though you use the stuff. Well, guess what? That's what the IRS says. The IRS says if you have a home-based business and you learn the rules of the game and you play the game by the rules, then when you spend your money on the cell phone, you can get it back if you use that cell phone for business. When you spend your money on a meal with a business partner, then you can get that money back if you actually discuss business. If you spend your money on a trip, if you leave your hometown and you go to New Orleans and you go there with the intent of discussing business with a potential referral partner, with a potential client, with a potential vendor, with a potential investor, then the IRS says, then you get that money back. So what I'm saying to you is that you have to actively get in the business of knowing how to get your money back. Well, the first step is to start your home-based business. I said that. How do you start your home-based business? I talked about this a little bit before. I'm going to talk a little bit about it now, but there's a whole nother class on starting a home-based business. But I'm going to give you the basis. Use your name. Do not try to do anything fancy. If you want to start tutoring, use your name, Lynn Richardson. If you want to sell popsicles, use your name. If you want to sell shoelaces, use your name. If you want to be a Mary Kay consultant, use your name. If you want to be in a network, whatever it is you want to do, use your name. It's very simple. You start right now. You're listening to my voice right now, and you have a gift, a talent, or something you can tap into. I'm telling you, it's not that deep. All you have to do is use your name. Second, your social security number. You will place your social security number on Schedule C of your 1040 tax return to report all of your business activity. You will report your income and you report your expenses. And this was extremely important during the pandemic because I think I've shared with you the example of two different hairstylists. Hairstylist number one, every time she got money from a client for doing their hair, for braiding, putting in a weave or washing their hair, giving them a relax or whatever, she took the money, put it in her bank account. Hairstylist number two took the money, bought lunch, took the money, bought dinner, took the money, bought some more hair, took the money, bought a purse, took the money. Before the money could even get to the bank account, she spent it. And then she went and filed for unemployment and food stamps and everything else. Well, that may have felt good then. But when the pandemic hit, hairstylist number one was able to show that she actually had a home-based business doing hair. And so she was able to apply for the EIDL, the PP, the paycheck protection loan. She was able to apply for those things, and she was able to get $20,000, $30,000, $40,000, whereas the person who did not document anything had to wait for an unemployment check, $600 or whatever they were passing out. So person number one, hairstylist number one, she didn't have a sophisticated name. Now on her business card, she may have said Lynn does hair or whatever. But when she went to report the income and the expenses, she simply used her first name, her last name, and her social security number. The third thing that you do is you name the principal business or profession, including the product or service. So I have multiple home-based businesses. One of them is speaking and teaching. Can you imagine that? Another one of them is for real estate. Can you imagine that? I still have a real estate broker license. Another one of them is for doing life insurance. I still am an independent contractor doing life insurance. So I have multiple home-based businesses on separate Schedule Cs. And each one of my Schedule Cs shows the principal profession or the activity that I'm doing. Your business may be selling shoes. Your business may be mowing the grass. Your business may be driving for Uber or a taxi or Lyft or some other ride share. Your business may be tutoring. Your business may be giving people advice. Your business may be doing coaching, life coaching, whatever it is. That's all you need to do is name your principal business or profession on Schedule C of your 1040 tax return. Now, I'm going to tell you right now, I'm not going to teach you how to file a Schedule C. You need to go to a tax preparer for that. My job is to teach you how to get your money back. And once you have all your documentation, you take all that to a tax preparer. The next thing is, what kind of business should you start? What do you like to do? What are you good at? What are you skilled at? If you are in HR, can you do a resume business on the side? If you are a teacher, can you tutor on the side? If you like health and fitness, can you do an exercise class, a Zoom class? What can you do? And then market your business for free. Go to Instagram, go to Facebook, go to Twitter, go to Threads, go to TikTok, go to all of them and market your business for free. Go to YouTube and be consistent. When I first started my business, you had to go buy a billboard, or you had to go buy an advertisement on a bench at a bus stop. You didn't even know if anybody was going to sit there. But now you can advertise your business for free. You can develop text groups. You can develop email groups. Is it easy? No, it's hard work. But in order to get your money back, you've got to commit to the work. Why should you get your money back? Let me explain to you why you should get your money back. Because the more money you make, the more the IRS will take. I remember living check to Monday. You all know what that was. I got paid on Friday. I was broke on Monday. Happened to many people, no matter how educated we are. I got all this money. I have a whole lot of money. Then I have no money. And then I'm struggling for the next 2 weeks or the rest of the month or whatever it is. Well, then I started making more money. Well, I'll tell you about my first big check. I think it was in the year 1999 or 2000. It was my first $20,000 commission check. Now, when I was getting paid $10,000 a check, my net pay, what came into my bank account, was about $8,500 because I was married with 3 children. So if I added my husband, my 3 kids, and myself, I had 5 allowances on my W-4. The W-4 is the document that you turn into your employer, and it tells them how to report your income to the IRS. You have to report if you're married, single, head of household, whatever, all those things, and you have allowances. I thought that the only allowances I could have was equal to the number of exemptions. Listen, everybody, exemptions and allowances are 2 different things. And people say, if you want to hide something, put it in a book so people can read it. Because the W-4 has to be read. Because there are people who have over 100 allowances. Because if you read the W-4, it gives you get 1 allowance for each child. You get 1 allowance for yourself. You get 1 allowance if you have 1 job. You get another allowance if you have another job. You get another allowance if you own a home. There's all these things. So once I actually read the allowance, I learned something. But let me tell you what happened before that. I got my first $20,000 check. It was coming. Now, I was still living check to Monday. I want you to be clear. I still was not financially where I needed to be. So I'd already spent the money before it got there. I had all these plans for what I was going to do. Because when I got a $10,000 check, I was accustomed to bringing home $8,500. So if I was getting a $20,000 check, I thought I was going to bring home $17,000, $16,000, $17,000, somewhere around double, right? Wrong. When I got the check, I got up that morning. I was so excited. I think I put on makeup. I was dressed real cute, went to work. The check was like $9,000. I almost passed out. I literally got dizzy. I was in my office. I'll never forget. And then I said, you can't get dizzy because you need your money. I said, you're right. I was talking to myself because I had to bring myself back from shock. I went into my office. I called the IRS. People said, well, Lynn, why'd you call the IRS? I said, because they're the ones who have my money. Who else you going to call? HR didn't have my money. The IRS, I was looking at my check. FICA and them had all my money. So I called the IRS. I got on the phone with the IRS and I said, here's my situation. I just knew there had to be a mistake. I explained my situation. Then the withholding agent, I didn't even know that a withholding agent existed. The withholding agent said, okay, hold on. Let me ask you this. What kind of job do you have? Oh, you're on commission? All right. And I could hear her tapping. You hear me tapping? I was like, oh boy, I think I'm in trouble. So she put me on hold. She came back. And the number that she came back was only a few pennies different from my check. That's when I learned. The more money you make, the more the IRS take. I dare you to go get a raise. Go get a raise and go from making $75,000 to $95,000. You are not going to see $20,000 more in your check. Go get a raise and go from making $100,000 to $200,000. You are not going to see $100,000 more in your check because you are going to go into different tax brackets. But guess what? The IRS was designed for people in business. Let me explain to you why. Businesses are the engine of the economy. An economy without a business cannot thrive. Just like a car without an engine cannot drive, or electrical stuff. Either way, that car has to have an electrical charge or an engine, or it cannot drive. You, in your business, you are part of the engine of the entire economy. So the economy, the IRS, makes it easy for people in business to be in business. Now, people used to think this was only for the wealthy. I'm telling you, it is not about rich or poor. I'm telling you, it's not about black or white. I'm telling you, it's not about educated or uneducated. It is about system 1 or system 2, which I'm going to explain to you in just a moment. So what the wealthy has done, what the wealthy have done, if I use in the plural tense, is they have gotten the knowledge or hired the people to say, what am I already spending my money on? That's a tax write-off. How can I get my money back? So that first year, I went and I learned from Sandy Botkin. Sandy Botkin used to be an IRS tax attorney. He used to train all the IRS agents. He used to train the IRS agents how to go out and find people who were not documenting their deductions properly. Sandy Botkin left the IRS over 30 years ago. I met him over 15 years ago in 2008, whatever that number is. That's when I met him. And when I met him, my godmother, who used to be a Chicago public school teacher, rest in peace, she told me my life is going to change forever. And she was right. Because when I met Sandy Botkin, that's when I learned I could hire my children. I could write off my cell phone. I could write off hundreds of deductions that I was already in business spending money on, but I did not have the knowledge. Here's what I want you to know. Whatever your financial situation is today, I get it. I've been there. I've done that. 1, you have to spend less money. 2, you have to get more money. But it was not fair to me to go earn more money on a $20,000 commission check and get less. I had to find another way, a legal way, an ethical way, and the way that the IRS has allowed us to do. And that's what I want to teach you today, because you will spend more money on taxes than on housing and food combined. Everybody here has a dream. If you get to your dream, if you get to your breakthrough, if you get to it, now I'm not saying don't pay any taxes. I'm saying don't pay more than you have to. Okay? Yes, I want to pay my taxes, but I don't want to pay more than I have to. And I certainly don't want to pay more than I have to because I'm unknowledgeable. So now it's your time to learn how to get your money back. Let me give you the example of the 2 systems in America. Remember, I said it is not black versus white. It is not rich versus poor. It is not educated versus uneducated. There are two systems in America. Look at this screen. There are two systems. There's an employee system and there's a business system. This is a hypothetical scenario. So talk to your CPA for your actual numbers. This is hypothetical. Under the employee system, let's say you get an income of $50,000. You don't have any expenses to report on Schedule C because you don't have a business. Because you were taught to go to school, get a good education, get a good job, and that you were going to ride off into the sunset. But you got that education, and now you have $100,000 in student loans. You don't own any real estate. You're living check to yesterday, and you're trying to figure it out. Or if you're lucky, you're making it to the next payday, but you're struggling. Well, you don't have any write-offs, so your taxable income is $50,000. And on $50,000, the taxes owed under this hypothetical scenario was $3,572 plus $32.50 for each dollar over $37,000. I believe this was based on the 2019-2020 tax rates. So that meant at $50,000, you would owe $77.92 in taxes. That's what the employee system says. But what does the business system say? The business system says if you earn that same $50,000, but you had a home-based business and you had $40,000 in documentable, truthful, let me tell you, everybody, documentable and truthful. Do not ask me a question about your bootleg business, your janky business, or your business that is a farce that doesn't exist. Do the right thing and tell the truth, because the beautiful thing is being in business will actually lead you to somewhere. So if you actually have a business and you hired your kids, your parents, other people, you're writing off your car, your mobile phone, your cable, your internet, your travel, your meals. I'll explain all this to you later. Let's say you had $40,000 in tax write-offs. Then your taxable income is only $10,000. And now you owe $0 in taxes. So in these two systems, the money is the same. Now, here's the deal. On the employee system, you still got to pay for your car. You still got to pay for your kids. You still got to pay for your mobile phone. You still got to pay cable internet. The only difference is you don't get to write it off. So getting your money back is essential. So what I say to everyone, live your life like a business. What I also did is I adjusted my W-4. Now there's a W-4 link. You can go to it and you can fill it out online and then go to your employer and adjust your W-4. So the next time I got a $20,000 check, I got more of my money. And at the end of the year, I still didn't owe taxes. I got money back because I learned to live my life like a business. So from now on, if you truly want to get to the next level financially, because yes, you're thinking about the money that you're having, I say, let's spend it, spend less of it. You're telling me, Lynn, I can't spend less. I'm at the bare bones, the bare minimum. I know people like that. Then I say, okay, go get more money. And then you say, Lynn, I got more money, but when I got more money, they took more money, more problems. Okay. So the next thing I have to say is get your money back. Learn your legal tax deductions. Live your life like a business. For me, everything is business. So when I take a trip, I'm going to give you an example. I went to my sorority national convention in 2008 in Disney World in 2008. I took my kids. It was business. I did a workshop. My children helped to sell the books, unpack the books, put the stuff back, my husband. So the whole trip was a tax write-off. Why? Because I was there for business. Did I enjoy myself? Yes. Did I go to Disney World and go to the parks? Yes. Back then, you could write off the parks. You cannot write off entertainment, but I've got some solutions for that as well. But the point is, I was able to write off the hotel, the transportation, half of my meals. I was going to spend that money anyway. So now today, I am asking you to ask yourself, every time you're going to spend $1, ask yourself, can I get it back? Can I get it back? That's what you ask yourself. So let me give you some examples of money you can get back. Your car and truck expenses. If you have a lease or car note and you're paying $500 a month, 500 times 12 is $6,000. If you've got gas and insurance and you got to register the car once a year, you got to rotate the tires, the windshield wiper fluid went out, all of those things, whatever that number is, you can also write that off. Now, if you're going to write off your car and truck expenses, you must also document your mileage. Let me give you an example. Let's say, for example, in 1 year, you drive your car 10,000 miles. And because you're tracking your mileage and you're living your life like a business and you're doing the work to get your money back, let's say you discover that half of those miles are for business. That means half of your car, truck, lease, gas, insurance. So this $6,000 plus $3,600, that's $9,600. Do the math. You will get to write off half of that if you can legally document it. What about your travel? Where did you go? I know a person every year, she goes to her family reunion, she goes to her high school reunion, she goes to her class reunion, and she's the organizer. And every year she goes, she spends about $2,000 or more. I said, honey, you are an event planner. So now, from now on, when you go, this is what you do. This is how you set it up. This is how you, and she was like, oh my God. So now she gets back the money that she spent and then some. What about communication? Your mobile phone. My mobile phone is only for business. I don't even use it for personal reasons. It's all for business. Okay. So when I get on that phone and talk, I am talking for business purposes. Even when I talk to my children, y'all might be laughing, but that's the truth. Everything is business. My youngest daughter is a college graduate. All of them are college graduates, but I hired my children when my youngest daughter was 6 because I understood the value of hiring my kids. And I'll explain that to you in a moment. So my communication, if your mobile phone is $250 a month, $250 times 12, that's another $3,000. What about interest that you're paying on debt for business? That could be $1,200 or more. What about wages? Okay. So here's the deal about wages. My grandmother, and I've talked to you all about Grandma B. Grandma B has 17 brothers and sisters. Okay. It was 17 of them. So she has 16 brothers and sisters. She had to cook for everybody. That's an expensive undertaking. I only had 3 kids. And I'm going to tell you right now, if I had to cook for 17 kids every day, everybody would not eat every day. I'd have a Monday, Wednesday group and a Tuesday, Thursday group. And on your day off, you have to fast, pray, or steal. I'm telling you the truth. I don't know what to tell you. But kids are expensive. You're putting them in daycare. They need clothing, school clothes, school supplies. You put them in ballet, tap dancing. You put them in karate, football, basketball. They're expensive. But the IRS says that you can hire your child and you can pay each child up to $13,200. And now that's 100% tax write-off to you. And it's 100% tax-free to your child. The IRS says it. Now, I'm going to take you to this link. Let me see if this link will show up on my screen. Let me just see what's happening here. On my screen right now, you should see 5 reasons to hire your child. This is from the SBA.gov. And it says, talent in a tight job market. This is from the government. This is not what Lynn Richardson is saying. This is what the government is saying. It says experience. Now you're giving your child experience. Then what it says here, number 3, it says tax-free income. Now this is a little old. It says earnings up to the amount of the federal standard deduction for your child's filing standard. So that means there is no federal income tax on earnings up to $12,000. That is now $13,200. It says payment for the services of your child under 18 are exempt from FICA taxes. It says payment for the service of your child under 21 are exempt from FUTA taxes. So this is tax-free money to you and your child. And it also explains to you it says, look what it says here. It says, if your child is young, be sure to check state labor laws. These laws set minimum wages, maximum hours, and a ban on hazardous work. It says under federal law, children younger than 16 years of age working in non-agricultural employment in a business solely owned by their parents may work any time of day for any number of hours. So your 14-year-old can do data entry. Your infant can model. Your 3-year-old can help you find pictures for your Instagram post. Your children can work. It says it. But this is a sole proprietorship. This is why I tell everyone to have at least one sole proprietorship. Now I'm going to go back and I'm going to show you another link that you should be aware of. In this particular link, because people don't believe you, you're going to go out and you're going to tell people what you learn. And they're going to tell you, no, you can't. It's illegal. I'm going to tell you to stop listening to haters, naysayers, blockers, and crab barrel leg pullers because they don't know what they're talking about. I'm going to tell you to go get the knowledge for yourself. So I'm going to go now to the Department of Labor, child workers. The Department of Labor says, and I want to show you what it says. The Fair Labor Standards Act sets 14 as the minimum age for most non-agricultural work. However, look at this. At any age, youth may deliver newspapers, perform in radio, television, movie, or theatrical productions, and work in businesses owned by their parents, except in mining, manufacturing, or hazardous jobs. They may also perform babysitting or perform minor chores around a private home. I need y'all to see that. This is not what Lynn Richardson created. This is not something that I paraphrased. This is what the government says. So stop telling people or stop letting people tell you that what you know is false. Stop listening to haters and naysayers and blockers and crab barrel leg pullers. And when you hire your child, people say, well, do you pay them? Yes. Now, you might be saying, where am I going to get the money? I'm not telling you to pay the kids money you don't have. I say pay them money you're already spending. I was already spending $250 a week on daycare, but I couldn't write that off. So instead, I paid my child, and then they paid their own daycare out their checking account. I paid my child, they bought their own books. I paid my child, and everything that got paid for them got paid out of their own account. And my children will tell you, yep. Now, they don't remember that they were working at Disney World. They remember that they were helping with the books, but they actually had a job. They just remember that they had fun. So you might be thinking, I don't have any children. You have somebody. You got a niece, nephew, godchild, godson, goddaughter, uncle, auntie, parent, somebody that works with and or for you or does something for you or someone. And even if you don't have anyone, that's just one deduction. On this screen right now, I'm showing you 7 different deductions. I'm telling you that there are hundreds of deductions. There are hundreds of deductions. One of them is depreciation. What is depreciation? If you buy a computer for $2,000 in 2023, it's not going to be worth that in 2024 or 2025. So some of your assets depreciate. And if you're using those assets for business, those are deductions as well. Then what about meals? Now, this is my favorite one. I'm just going to stop here for a minute. We only have a few more minutes in this class, and then we're going to go to Q&A. Everybody's eating every day. You all are ordering Uber Eats. You spending more on the delivery than you spending on the food. The amount that you spend on delivery, you could have 18,000 more meals. We're going out to eat with our friend, our best friend, our boo. Let me tell you something. All meals are business for me. Because if I go out to have a meal and I discuss business, the whole meal is now a tax write-off. In 2021 and 2022, if you ever done your taxes, meals were 100% deductible because of the pandemic. If you went to a restaurant, even if you ate alone, and if you could document that it was for business. But if you didn't know how to get your money back, all you did was spend some money that you're never going to get back. Now, yes, I want to spend less money. Yes, I want to get more money. But when it's time to do my taxes, I also want to get my money back or pay less taxes if I can. So even if you're only spending $200 a month on meals, if they are meals that are business meals, then they can be tax deductible. Now, let me give you one example. There are times when I throw dinner parties at my house, and I learned this from Sandy Bakken. Whenever I throw a party at my house, it's no longer a party. It's a business dinner. And when everybody comes and rings the doorbell, house business. And I invite my business partners, it's always business. Why? Because someone's always asking me about money, always asking me about how to do something different. So I set it up as a business dinner. So that way, the meal that I bought, I can now use it as a tax write-off. And I am legitimately doing business. I've got my books out. Ask any of my students that have been to my house, my sorors, my friends, my colleagues. I'm always talking about business. So meals can be tax deductible. So with just what I see on the screen right now, if I was to come and sit with you, you don't have $45,000 in tax deductions. Even if you take out the wages from hiring kids, maybe you don't have any kids, but there's still hundreds of other tax deductions that you are not taking because you don't know how to get your money back and you're scared. This is just the beginning. So in class number 1, stair step number 1, stair step number 2, I gave you the assignment of downloading the Master Business and Budgeting Journal. And in those pages, I show you how to separate your business from your personal expenses. This is now the beginning of your tax diary. Okay? Now, getting your money back is hard work, but so is being broke. Which work are you going to do? That is the question. Which work are you going to do? Here's what you must do. When you made the decision to be an auto mechanic, you had to go learn, even if you went and learned in an alley because your uncle was fixing cars. When you made the decision to become a teacher, you went to school. When you made the decision to become a nurse, you went to school. When you made the decision to do hair, you went to get a license. When you made those decisions, you went to school. What makes you think you can make the decision to be wealthy and not go to school? What makes you think that? You must get the knowledge, but then you must also remember knowledge is not power until you put it into action. Don't be scared. Be prepared. Learn the tax code. I learned the tax code one deduction at a time. That's what I did. I learned the tax code one write-off at a time. And I made sure that I understood what those write-offs meant. So you learn the rules of the game, and then you play the game by the rules. So I'm going to show you in just a little bit of time that I have left. I've got a few more minutes, and then we're going to go to intermission, and then we're going to open it up for Q&A. This is a common tax deduction packet. And this shows some basic deductions that almost anyone can get. Okay? And it shows some information about a W-4, how you fill that out. And it shows some other basic deductions. And I'm going to show you two things that are very, very important. Common business deductions, car, truck expenses, travel, communications, interest, wages, and depreciation. I showed you those things. I did not tell you that if you have a home-based business and you have a home office, now you are in business, baby. You are in business. Because let me tell you what happens when you have a home-based business. This is an IRS diagram. When you leave your house, look at this. You left your home and you go to your regular job, it's never deductible. Look at that. Never deductible. But if you leave your house and you go to a temporary work location, then you are going to get a tax write-off for the mileage and the gas and whatever else you've spent on that time. So that's very, very important. I want you to see that, okay? The other thing that I want to show you is and some of you may need these links. I'm not sure if these are showing on the screen, but they're certainly on mine. I'm also going to send you IRS Publication 13, where it tells you can hire your kids in your home-based business. IRS Publication, and let me give it to you. IRS Publication 15, page 12 or 13. IRS Publication 15, page 12 or 13 tells you exactly what the rules are for hiring your children in your home-based business, okay? So this screen that you see, there are a few links here that I'm going to share with you. You'll be able to access them. I'll tell you where you can access them so that you can go and find this information out for yourself, okay? So stair step number 1 was to spend less money. Stair step number 2 was to get more money. Stair step number 3, get your money back. And if you want to know more, I am going to now lead you directly to my mentor. Go to getyourmoneyback.tips and take the class. There's a free class there for you to take to learn more about tax deductions from a certified public accountant. I am not a CPA. I've written books. I know how to summarize these things. But when you are ready to actually get the knowledge and or file your taxes, I have now given you this homework assignment. And that is go to getyourmoneyback.tips. Okay? I'm going to just go over very briefly. Again, wellness is a community effort. Tell someone to register. We have more upcoming sessions. And now I'm going to turn it over to my co-hosts for an intermission and to give away a few wonderful things and then come back for Q&A.
Good evening, everyone. This is Antoinette Rogers, your friendly program director. I have learned so much, and Dr. Lynn, I will say there are some things at which I'm shaking my head because I could have had some deductions and I just didn't know. But thankfully, I am participating in this financial health and wellness webinar series, and I am going to know better, so I'm going to do better. We want to remind everyone to take time to visit the DREF website, the Delta Research and Educational Foundation's website at www.deltafoundation.net. And there you can find out more about DREF and our other programming that is designed to empower African American women and their families. We also want to know where you are viewing from tonight. So please take time to type in your city and state in the chat so that we'll know. I have been looking at the chat and I have seen people from South Carolina, Michigan, Texas, Ohio, Delaware, California, Virginia, North Carolina. It is absolutely wonderful. We have more than 1,000 people with us tonight, as we have for the last 2 weeks, and we are very pleased. So continue to tell people to tune in. For the last 2 weeks, we've been able to give away some dynamic door prizes, and this week will be no different. We will have some door prizes, wonderful help and consultation on a home-based business, $475 tax deduction, and that is one of the gifts. And we have a few other gifts, and so I am going to give you the names of the winners tonight. And I believe we have 3 winners. They are, and I will call the first name and last initial. This is She T. The name is spelled CHEI. The last name is initial T. And we also have Patricia P. from Savannah, Georgia. And Latoya Corprew from Middletown, Delaware. Congratulations to all of our winners. Oh, I see that we have some more people here. We have some names generated. Yes, Patricia P. from Savannah, Georgia. Also, we have Angela B.R. from Harrisburg, North Carolina. And S. Hoey from Shreveport, Louisiana. Congratulations again on your prizes. For those people whose names were called, please make sure you send us an email at fwhp@deltafoundation.net. Give us your name, your home state, and let us know that you are a winner so that we can connect you with your prize. Again, we thank you for joining us. We want to encourage more people to join, so spread the word. Make sure you visit our DREF website and have a great evening. I'm going to turn it back over now to Dr. Lynn. Take care.
Thank you so much. I'm so excited, and I already have so many questions. I'm just going to get started so that I can answer as many questions as I can. And while I do that, I'm going to put just a couple of things back on the screen, because even though you can watch this again, and it's important to listen more than you write, because you can watch it again and again and again, and then you can take those notes in. But I really want you to get the information. But while we're doing that, I want to make sure that I've got some important points up here for you so that you can go on and get yourself to the next level. So homework assignment is go to getyourmoneyback.tips. And at getyourmoneyback.tips, you'll see access to information from my business partner, who is a CPA and who has been part of the team. I have been studying since 2008. I don't even know if I can do the math. How many years is that? 15, 16 years? That's how long I've been studying. And let me tell you when I stopped. Never. I keep studying because things keep changing. Rules keep changing. For example, in 2008, I could write off entertainment. In 2023, I cannot. So there are different things that you do when you are doing business. Just this past weekend, I'm one of the producers and investors for The Wiz. Yes, The Wiz is coming back. I took my business partners out to dinner. The dinner was a tax write-off. The car, the transportation was a tax write-off, but the tickets were not. Okay? So if I want to give tickets as a gift and then get a write-off, the IRS says that if you give a gift, then the maximum amount for that gift is $25. If I give a gift to Lauren Johnson or Susan Jones or Robert Black or any individual, the maximum is $25. But if I give the gift to a business, There is no limit for the gift for business. So there are things like that. So if I'm going to give a gift, then I'm going to invite my business partners at such and such company to accompany us to the Wiz. I'm going to take you out to eat. The meal is a tax write-off. The car is a tax write-off. And now even the tickets that I bought for you are tax write-off if I do it for business. Okay. And so anything that I ever do, I always tell people, listen, if anybody comes knocking on your door asking questions, tell them the truth, because I don't have anything to hide. And I don't want you to have anything to hide either. So that's why you're going to learn the rules of the game and play the game by the rules. So question number 1, what do you think about going to a restaurant to have lunch and a Zoom meeting with a client? Can this be written off as a business expense, even though the client isn't physically there? And perhaps maybe one of our moderators want to read the questions. Our moderator, Virgie, may want to read the questions, and that way I could just answer them. So I do see the first question, and it is about going to a restaurant, having lunch, doing a Zoom meeting with a client, and can this be written off as a business expense, even though the client isn't physically there? I'm going to say be cautious, and I'm going to say beware. If that is your standard practice, because for whatever reason, you are unable to have lunch in a different space. Let's say your job is physically on the road, and you are on the road. And let's say you are, especially if you're on a business trip. Yes, that's a tax write-off. But if you just left out of your house and went across the street and there is no physical contact with the person, now you're doing a Zoom. So now I'm wondering, what restaurant are you going to where you are actually doing a Zoom and talking out loud at the restaurant with nobody else sitting there? So when I start to think about these things, I start to ask myself, does it look right and does it sound right? If it doesn't look right, if it doesn't sound right, it probably is not right. So am I going to actually say to an IRS agent, if I was ever asked, the IRS agent says, Lynn, I see 100 businesses here. I see 100 lunches here. And I see that you went by yourself. And every time I tell them I went to Papado, I went to Red Lobster, I went to the Capitol Grill, and they're going to say, you actually sat there, you were on a Zoom talking to a phone? That doesn't sound right. I'm not going to tell you it's not right, but I'm going to tell you you're going to have to really prove that. But if I tell you that every day I took out another colleague and I went to a restaurant and I had that meal, then that's going to make sense. If I tell you that I took out an employee that works for me, that employee happens to be a niece, a nephew, a child, or whatever, and we went over their plans, we went over their itinerary, we went over protocol, I did some training, I can document that. So whenever you're thinking about a tax write-off, you need to be able to explain that tax write-off, and it needs to make sense. Because I'm going to tell you right now, if I see somebody at lunch or dinner by themselves talking to a Zoom out loud, because you can't whisper, you got to talk, I'm going to say, what's wrong here? Okay? Because when you are at a lunch, you're supposed to be having a one-on-one private conversation. And I'm just imagining that a Zoom would be a little strange. So that's my warning for that. I'm going to tell you to actually have a real lunch with someone. All right? Now, in 2021, 2022, you didn't have to be there with anybody. For 2023, I'll have to be honest with you, I'm not clear if the COVID guidelines are still in place. To my knowledge, for 2023, it's back to the old way. Here's another question. Do I have a moderator to ask the questions, or am I asking them?
I'm here, Lynn.
Excellent.
I am a real estate broker. I use my social security number. Should I consider an LLC or an S Corp? I have this conversation with my accountant every year, and he advises against it. Please advise.
So if your accountant is advising against, and it sounds to me that like they're advising against an LLC and an S Corp, then I'm telling you that your accountant is probably not knowledgeable. Now, here's the problem. Tax professionals are just like doctors. Tax professionals are just like attorneys. They don't know everything. They only know their area. So you would not go to a foot doctor if you needed brain surgery. You would not go to a criminal attorney if you needed information on how to start a business, and vice versa. You need to go to an attorney or a tax professional that has, or you're an accountant, you should go to an accountant that has expertise in businesses. I'm going to tell you all something, and I'm telling you the truth. You can Google me on YouTube. I did a series with a CPA and a C-Tech. A CPA has gone to college and gotten licenses and taken some very difficult exams. The C-Tech has gotten additional training to do taxes in California. Neither one of them had ever heard that you could hire your child to work in a home-based business. My question to you, is that who you're going to go to? Or are you going to go to the tax professional who actually knows IRS pub? I didn't make that up. That is in the tax code. You go to irs.gov, or anybody listening, Google IRS publication 15 and go to page 12 or 13. And it's going to tell you about hiring your family members. It's going to tell you right there. So just because a tax professional tells you don't do it doesn't mean that they're telling you the truth. It just means they're uncomfortable. And sometimes they are uncomfortable because many of their customers or many of their clients are estimating. So I recommend that you go to a tax professional who actually knows how to help you do legal, legitimate business taxes. And then you do a side-by-side comparison. There are so many people who are getting an S Corp when really they need an LLC, or they need both. Let me give you one example. This is important, everybody. Does anybody take high blood pressure medication? Does anybody take medicine for their heart? Does anybody have to get their teeth cleaned? Does anybody have an implant? Does anybody have any kind of medical expense that is not covered by insurance? Well, guess what? If you are an individual walking around just every day, you're walking around as an individual, you cannot write off your out-of-pocket health expenses until you get to a certain number. So, I may be misquoting, but I believe it was for 2019. The first $7,500 is not deductible. It's only the amount above that. So that means you have to spend $7,500 before you can deduct one. But if you have a home-based business and you have a single member LLC, like I talked about in step number 2, you now get to set up a self-employed medical reimbursement account. You then get to hire your spouse, your children, whomever else, and any out-of-pocket medical expenses now become a business deduction. I need y'all to hear me loud and clear. One of my children came home, a baby tooth didn't come down right. They had to pull the baby tooth out and do an implant. That cost me $4,000. But I was able to get the money back because she works in the business. My husband works in the business. We have the self-employed medical reimbursement account. And for those of you who are really serious and you really want to set up a business, I'll show you how to do that. That you can't get that in this class. You actually have to come in and have a talk and a consultation, set things up and do things the right way. So one of my students who is a pharmacist, she and her husband, married, 2 children, white picket fence house, every year owes money on taxes. After she learned how to deduct all of her things, and it's on the website. If you go to getyourmoneyback.tips and you go down, you'll see her testimonial. She got back $35,000. I didn't tell her to say that. And those are the kinds of things. Jeff Bezos, the world's richest man, gets a tax refund. And most of us are walking around either doing things illegally, incorrectly, or you have tax preparers who are simply unknowledgeable. And I want you to get into wellness. Wellness is about knowledge. And knowledge is power when you put it into action. Thank you for that question. What's the next question?
For the home expenses, such as cable, internet, etc., does the bill need to be in your name or can it be in your husband's name?
So here's the deal. If you have a spouse and each of you has a home-based business, which is what I recommend, let me tell you why I recommend that each of you have a separate home-based business. Because if you have one home-based business together, you can't hire the other person and get a tax write-off. But if I have a home-based business and my husband is an employee in my home-based business, so when he travels with me, he is in charge of security. He's in charge of getting the books out of the car. He's in charge of making sure when I get to the event, certain things are happening, I can legitimately hire him. But if it's our business together, he's just working. Okay? If you have a home office and the bill is in your spouse's name, you just need to know that you paid a portion of that bill in order to write it off. You cannot write off what you don't pay. Let me repeat. You cannot write off what you don't pay. So in my household, we have a joint checking account. So even though the bill is in his name, I'm paying the bill out of our joint checking account. And yes, I am attributing that cost or that portion of the expense to my home-based business. So again, that's your home office deduction. You want to document everything because you can write off a portion of your rent, your mortgage. Now, the biggest myth out there is they say, well, the only way you can write off things in your house is if you own a house. No, that's not true. You can rent. You can write off a portion of your rent, your light bill, your gas bill, your cable bill. You can write off a portion of all of that if you have a home office. But now what do you have to learn how to do? You have to learn how to have a proper home office. Because if your children are sleeping in there or they taking a nap in there after school, it's no longer a home office. So now you have to learn how to run that office. So I had a client and she was like, Lynn, I just have a 1-bedroom apartment. She said, but I want the bedroom to be a home office. Can I sleep in there? I said, nope, sleep on the couch. Do you want your money back or not? Sleep on the couch in the living room. Get you a couch bed. But that bedroom, because it was only 4 small rooms in the apartment. So the bedroom represented half of the space of her apartment. That meant she got to write off half of her rent, half of her light bill. I will sleep on the couch for that. Okay? This was a single person looking for more write-offs. All right? So just be careful about that. Thank you for that question. What's the next question?
In the same vein as that, how one viewer says, how are you able to write off cable? That's TV to me. How are you relating that back to business?
So here's my answer. You cannot write off TV because it's TV to you. TV is never TV to me. TV is business for me. So I can't tell you how business needs to be for you. I only know what it is for me. And everybody who comes to my house knows I'm a financial professional. Guess what I watch all day? CNBC. Everybody knows that I'm an entertainment professional. So I may watch something and I may watch it to compare it to a TV project or a film project. As a matter of fact, they're always saying, okay, we got this new script. Watch this compared to that. I'm watching it for that. But then are there certain times when I watch for personal reasons? Sometimes. So now I have to figure out the percentage of time that I watch TV for business. I just write it down. That's why you have your business and budgeting journal. In your business and budgeting journal, I've given you a way to track your personal and business expenses and activities every single day. Now, if you haven't downloaded it, shame on you. Go get the thing. It's helpful, okay? So one thing I will never do is tell you what to write off. I'm just going to tell you what I do for me. Then you have to decide if you're watching TV for business or personal reasons. I'm telling you, I'm not eating for personal reasons. I'm not watching TV for personal reasons. I'm not traveling for personal reasons. I'm not doing any of it for personal reasons. For me, it's all business. And I can back it up with documentation. Okay. So you will then make that decision for you, because some people will decide this is too much. I'm okay with giving my money away. Well, go right ahead. Give your money away. I'm not doing it. Okay. So that's how I look at it for me. And then I go get all the proper legal and the CPA support that I need to make sure that everything I'm doing is accurate. Next question.
Lynn, if I have a home or a house in a trust, do I still qualify for the same exemptions as a home-based business out of my home?
I'm not sure if I understand that question, but what I am going to say is that there are hundreds of tax deductions. Okay. So there are hundreds of tax deductions. And what you have to, so I put on the screen, Get Your Money Back tips, but there's also a book called Get Your Money Back that I wrote with hundreds of different tax deductions. I believe someone received it as a gift, but you either go sit with a tax preparer or an attorney and learn about each deduction, or you get into class to learn about those deductions. Okay. But Get Your Money Back tips is a great place to start. And then one thing that you can do at Get Your Money Back tips, you can scroll to the bottom of that page and you can request a pre-tax analysis. A pre-tax analysis is basically going to tell you what money you're spending that could potentially be a tax deduction. And it's also going to tell you what you need to do in order to prove and document that that's a tax deduction. Okay. So I can't really tell you if what you're doing is a tax deduction. You have to remember, live your life like a business. And I don't know if you're living your life like a business, but I will tell you all this. One of the things, if you get audited, don't be scared, be prepared. The IRS may ask you a random question. They may say, how often do you work in your business? Sandy Bakken, my mentor, he says all day long like a dog. That's the answer. All day long like a dog. But if you actually have to come down to a real answer, if you're only working in your business 1 hour a month, you're not running a business like a business with the intent to make a profit. You got to work more than 1 hour a month if you have the intention on having a profit. So the IRS rule for measuring whether or not you are working in your business is if you are working your business 4 days a week for 45 minutes each time you work. What are you doing? Are you sitting at the computer? Are you marketing? Are you responding to emails? Are you doing your books? Are you setting up processes? Are you prospecting? Are you finding new customers? Are you physically getting in your car, driving for Uber? Are you physically going out, selling your Mary Kay? Are you physically teaching a class? 4 days per week, 45 minutes per session, 45 minutes each time. Okay. Don't overthink that. Somebody asked me one time, well, what is a session? Come on now. 45 minutes. Okay. Are you working 4 days a week, 45 minutes each time you work? It's simple. All right. But your budgeting journal is definitely a way to help you track and measure your activity. Plus, it's going to give you lots of wonderful, wonderful tips as well. Next question.
Where can we learn the appropriate way to hire our kids? And I'm going to add to this, the other questions are documenting all of this information, all of the dinners, the meals throughout the year. And how do we prove the business dinners, that they're business dinners?
Okay, so that's a great question. So first, how do you learn how to hire your kids? I have a class, how to hire your kids. It's real simple. Now, this series is we've got 8 stair steps, and then we've got 2 weeks of Q&A. There are no easy answers to hard questions. If it was easy, we wouldn't even be here. Everybody will be rich, wealthy, and we wouldn't even be here. I can give you the concept, but then to learn more, you're going to have to ask DREF to let me teach longer. That's all I'm going to tell you. Okay? And I know they probably in the background cracking up. You're going to have to let me teach longer because I can't teach you everything in 45 minutes. My students have been studying for 3 years and they don't know everything. So I'm going to have to come back with more classes. I'd be happy to teach how to hire your kids, how to start a corporation LLC. So you start a business now what? LLC. I'd be happy to come back, but I can't teach those things today. So when I say You got to go get in class. I'm not trying to just throw you off. I'm actually telling you the truth. There's a whole class for that. Also, there's a bonus for you. For those of you who have actually downloaded your master business and budgeting journal, the last 4 pages I go through step by step how to hire your kids and what you need to do to document it. But some people may still need a verbal class, and so there are classes for that as well. Okay. Now, how do you learn how to document these things? One deduction at a time. One step at a time. So let me give you a very simple test that I always ask myself. Every time I'm about to spend some money, I say, can I get it back? What do I mean by can I get it back? Is it a tax write-off? If I don't know, then I go find out. If I don't know how to go find out, then I get in a class. If I do know that it's a tax write-off, I go find out and I follow the rules. And then if I have a question, I contact my tax preparer. That's how I do it. Every single time I spend a penny. Now, you all may be thinking, well, it's just $10. It's just $20. Let me tell you something. The first year that I learned how to get my money back, and I learned how to understand the tax deductions legally, ethically, and with the permission of the IRS, I already thought I was a genius. I was like, oh, I'm a financial expert. I went to one of the world's top schools. I know what I'm doing. No, I did not. When I got through, and now back then, I got a big old case of, and I had to listen to 25 CDs. I had all these different books. I bought everything he had. Okay. You all are here for free. I bought everything he had. And I read everything, listed everything. I took the home office class. I took the hire your kids class. I learned everything, wrote things down, went through my little journals. And every day I had what he used to give us. He gave us a daily expense record. What I did for you is I gave you a budgeting journal so you don't have to go get individual sheets of paper. You download that free book that people pay money for. I gave it to you for free, okay? So that can help you. When I got through documenting my expenses that year, I went from having 16 to 17,000 in write-offs. I don't know, maybe it was a little under 20,000, somewhere around there. I had $80,000 in tax write-offs. Stuff that I could document. Every single penny. So people say it's just. I dare you to go add up all your it's just. Go add up all your Starbucks it's just. Go add up all your going out to eat, buying jujus with your friends it's just. Go add up all the it's just. That's where your wealth is. And that's where you need to go and get your money back. Okay? So it takes time. I wish I could give you all a miracle pill. I wish I could just come here and say, here's the answer. It's done. Voila. Everybody's wealthy. But no, it's going to require your work. Okay? And you getting the knowledge, because you are the only one who knows how you live your life. So if you know this is what I'm doing in my life, I have a cell phone, I'm going to use my phone for business, you are the one who has to document that. I can't document it for you. You have to do it for yourself. Not even your CPA. I tell people all the time, the number one question I get or the number one complaint, they say, my tax preparer never told me this. They're not supposed to. It's like a dentist. The dentist cannot brush your teeth. They can only clean what you bring them. And if you didn't clean them, floss them, they might be gone. The CPA can only write off what you documented. And if you did not document it, they can't help you. And they can't teach you the tax code. You have to learn that yourself. I want everybody to understand that it is not your CPA's job to teach you the tax code. You have to learn that on your own. Because your daily activities, what did I say about wellness? I'm going back up to the page about wellness. This is why I review. Sometimes people complain. We already heard that, but are you doing what I said? It said, wellness is the act of practicing healthy habits on a daily basis to attain better physical, I'm going to add financial and mental health outcomes so that instead of just surviving, you are thriving. This means you have to be doing this every day. And if you don't know what you're doing, you're either going to not have any money or you're going to get in trouble. And both are avoidable. You can have some money, you can get more money, you can get your money back, and you can do it legally, ethically, and all with the permission of the IRS. I love these questions. What's the next question?
Is a sole proprietorship the same as an LLC?
An LLC can be a sole proprietorship. I went over that last week. I won't be able to go over that extensively this week, but an LLC can be a sole proprietorship. An LLC can also be a multi-member LLC. So you can have one or the other. You can have a single member LLC that operates as a sole proprietorship. You can also have an LLC that is taxed like an S corp. And then you can have an LLC that operates as a multi-member managed LLC. And there's a difference between all three. Next question.
I appreciate more information on the benefits of life as a business. But how do you deal with the adverse effects of lower documented income on tax returns when you're wanting to buy a home?
Very good question. If you want to buy a home, you don't need to show tax returns. That's the biggest myth ever. If you have a W-2, that's all you need to submit. So let's say, for example, you have a job, you get a W-2, you make $150,000 a year, and you have a business on the side, and you have tax deductions. The problem is, and I am a federally licensed mortgage originator. I am a federally licensed I'm a licensed real estate broker. I'm a licensed insurance broker. I'm a licensed loan originator. I'm going to tell you now, and I tell everybody, there's one of my courses called Road to Homeownership. I'm going to teach about real estate later. You don't need to send in your tax returns. Tax returns are not necessary. But what happens is you're dealing with people who are unknowledgeable. They get your tax returns. They see that you have write-offs, and now they want to reduce your income. You don't need tax returns necessarily to buy a home. If you have a W-2, a job that takes money out, that's all you need to show is your pay stub or your W-2. That's one thing. Here's the second thing. I've got a scenario with a young lady who just graduated from college. She just got a job. While she was in college, she did work on the side, but she doesn't have to report that income. She's able to show her pay stub from her job, even though she doesn't have a W-2, she doesn't need any tax returns. Scenario number 3, you can do bank statements. You don't have to show tax returns. You can show, I bring in X number of dollars a month, but my tax returns are going to show a loss, because they should, if you're really doing business, getting your money back. What I'm saying to you is there are options. And what you need is a master financial coach. And I'm going to explain the difference between a financial advisor and a master financial coach. A financial advisor is regulated by FINRA in order to provide you with investment advice. What stock, what bond, what mutual fund, what ETF. A financial coach has knowledge about many different areas and can advise you on what steps to take when you go to the advisor, or when you go to the loan officer, or when you go to the insurance agent. So ensure that you've got both on your team. Next question.
Can the links that you discussed earlier, can it be posted or given to the group later?
The links will be at lynnrichardson.org. Go join for free. That's the only place I'm going to post them. lynnrichardson.org.
When you have a home, how do you manage the house tax write-offs versus the business tax write-offs? I'm not good at taxes.
You're not supposed to be good at taxes. I want everybody to understand that, okay? And I want everybody to understand, if you want to get your money back, you need a tax preparer, and you need to pay them, because what you pay them is also a tax write-off. You're not supposed to be good at doing taxes. I don't do my own taxes. I just know how to document what to take to the tax preparer. I know how to say, I drove here from here to there because it's in my navigation, it's in my calendar. I know how to go every day in my budgeting journal and write down my personal expenses and my business expenses. I know how to ask myself and tell myself the truth. Was this personal or was this business? I know common sense. I know that if I went out to eat with my husband, the IRS is not going to believe that was a business meal. So if I go out to eat with my husband, I better bring somebody else if I want to write it off as a business meal. And these are things that you learn. Listen, no one is going to know this the first time you hear it. Nobody. This is like trying to drink water from a fire hydrant. No one is going to learn all 400 tax deductions or 100 tax. You're not going to learn it. You have to stay in class and you have to keep reading to make sure that the deduction you are trying to apply. And then eventually, because we are creatures of habit, I know my deductions. So I know when I went to the Wiz, how I have to document that. I know when I travel, how I have to document that. Now, when you document your expenses, you need to know who, what you did, when you did it, where you did it, and why it's a business deduction. Let me repeat. Who, what, when, where, and why. And for those links, those extra links that you want, like for the Department of Labor, all those things, those are going to be at lynnrichardson.org. And let me tell you why. Because I want to make sure that I am responsible for providing you with accurate information. And when that changes, I want to update it. If something changes, I want to be able to say, hey, this changed. I don't want you having these links somewhere else out there in the world, and I don't have control. And then you say, well, Lynn sent me this 5 years ago and it doesn't work. No, it's going to be at lynnrichardson.org. Okay. Next question.
Awesome. Can you hire your child from an LLC?
You can hire your child in anything you want to. The question is it going to be a tax write-off? The question is, will you have to pay FICA taxes? Remember, the IRS says you can hire your child to work in your home-based business. So let me give you an example. If you have a hair salon in a building, that's not your home-based business. But if you do hair at your house, or if you make up your wigs, or you do your consultations, that's a home-based business. If your home-based business is a single member LLC, yes. And you can pay them up to $13,200 a year. Go and add up how much money you spend on your kids. It's more than that. I'm telling you that. And so for me, I had 3 children. So that was whatever the number was times 3. I have 3 children. So if you hire them in your home-based business that you're operating as a sole proprietorship, and it happens to be a single member LLC, yes. But if you hire them in your S Corp, now you got to report the income to the IRS. They got to report it. It's not on your Schedule C. It's all kind of other things, okay? Now labor laws come into effect. All right? So that's why having a sole proprietorship or a single member LLC that operates as a sole proprietorship, that's why that's one of the things. And if you are confused, it's because you're supposed to be. You got to get more knowledge.
Understood.
A sole proprietorship can be your name, your social security number, or you can get the protection of the corporate veil and file it as an LLC. But the LLC must operate as a sole member, a sole proprietorship. If your LLC is taxed as an S Corp, it's not the same. And if your LLC is a multi-member LLC, that's also not the same. I am talking about tax deductions for people who have a sole proprietorship or those who have a single member LLC that operates as a sole proprietorship. Are there tax deductions for other businesses? Yes, but that's not what I'm talking about. Having a corporation with other people, those are other things. And yes, you can get deductions over there, but now your child have to follow child labor laws. You have to go get permission to hire them. That's not what I'm talking about. I'm talking about a home-based business, sole proprietorship. That's the easiest, quickest way, more effective way to get your money back. Now, you may have other businesses. I have multiple businesses. Last week, I showed you my single member LLC corporate book. I also have a book for my corporation. I also have a book for my S Corp. So I have multiple businesses, but I know which business to put the tax write-off under. And that's what you want to learn. Next
Awesome.
question.
I think this is our last one before 8:30. What if those deductions add up to more than the actual income you made under your sole proprietorship?
If the deductions add up, then you are going to take a loss. And don't let anybody tell you that you cannot take a loss. I want you to go to the Financial Times and I want you to see how many companies, big companies, took a loss. How many companies did not have a profit? They had a loss. You can't have a loss. The next question people say is, well, how many years? There is no real number, but the goal is eventually to not have a loss. The goal is to have a profit. So in addition to running a business, one of the things that you want to do is learn how to run a profitable business. Okay? I want a profitable business. I want a multi-million-dollar business. I want to pay those taxes, but I want to pay as little as I legally have to. Okay, so if you have more expenses than income, then you are taking a loss, and there's your tax write-off. And I think I am able to. I think we cut it off now. We're right at 6:30. I'm sorry. I'm on the West Coast, so it's right at 9:30 Eastern right now. Thank you all so much.
Thank you, Dr. Lynn. Another fantastic week. This concludes week 3, but the good news is we still have 7 more weeks to go. And I don't know about you all, but I am learning and growing each week and oh so thankful for it. Again, thank you, Dr. Lynn. For those of you who have been asking about the resources, we will make sure that the journal is uploaded to the DREF website early next week. So please check that website at www.deltafoundation.net. And on there, you will see a flyer for the financial health and wellness program. And under that, there will be a link and we will have those resources there for you. And as you have heard, you can also visit Dr. Richardson's websites. And she has 2. She has lynnrichardson.net as well as newwealthuniversity.org. Is that right, Dr. Richardson?
Actually, the other way around. So newwealthuniversity.net and lynnrichardson.org. And lynnrichardson.org is where all the free stuff is. And you can ask questions and you're in a forum. And, you know, it's just a community of wealth building. And it's so beautiful. lynnrichardson.org. Yes.
Absolutely. I had a little confused, but you know why? That's because my mind is so full of all this other good stuff. So thank you. And
Yes.
Thank you to everyone who has joined us tonight. We look forward to hearing from you. If you have questions or would like to provide feedback, we will monitor the chat and we are videoing this and you may watch the repeat on YouTube. And if you have additional questions, you can email us at Financial Health and Wellness Program. That's FHWP at deltafoundation.net. You can email us at that email address if you have questions regarding resources or anything that you have heard this evening or in previous weeks. We thank you again and we look forward to seeing you next week. Take care.
Bye-bye. Thank you all so much.